Morning, everybody. It's the 4th of February. I'm Joe Neighbour from Signal Centre, joined by Steve O'Hare. Good morning, Steve.
Good morning, mate. You all right?
Yeah, not bad. Glad it's Friday.
Non-farm Friday. Ooh.
Although we may have got all the volatility yesterday. It was an interesting one, certainly on the currency front for euro. Big moves yesterday.
Yeah, obviously something came out after the close last night.
Was there? What? Amazon?
Maybe. Yeah, probably.
I think they came in a bit better.
Yeah, had a bit of a rally after the close. 9 o'clock, closed lower. I was just watching the Nasdaq, obviously.
Yeah, that'll be Amazon then.
Yeah, and then it bounced back really aggressively. So yeah, just interesting potential for today, I think.
Yeah, so fair amount going on in the news as well. Obviously, I know it's only relevant to the UK, but the crisis surrounding Boris Johnson is deepening. He had 4 of his top aides quit yesterday. He had his chief of staff, his principal private secretary, both resigning, as did his director of communications. Probably the most damaging, though, was the exit of Munira Mirza, who is one of his long-standing allies, who quit as head of policy. The policy unit in a protest over scurrilous remarks made by Johnson about opposition rival Keir Starmer when he mentioned Jimmy Savile. It hasn't gone down very well. So aside from that, because he looks like a dead man walking now, really. But in terms of what's going on the corporate side of things, as Steve mentioned, there was a bit of a rally yesterday after hours, and that was because of Amazon showing the Meta platforms how it's done. The e-commerce giant is poised to add nearly 200 billion in market value if the stock's 14% gain in after-hours trading holds to Friday's close. So pretty massive moves there. That would be the biggest single-day gain in US stock market history, coming just a day after Facebook parent Meta entered the other end of the record books with a 250 billion wipeout. So some big numbers being thrown around here. In terms of what's going on the Russian-Ukraine situation, Moscow has considered staging a graphic propaganda video that would purport to show an attack by Ukraine on Russia or Russian-speaking people as a pretense for an invasion, US officials have said. Wow.
Jesus Christ.
So yeah, I don't want to get too much more into that. That's just crazy. But what else we've got? Oil headed for a 7th weekly gain as investors fret over fast tightening markets, geopolitical tensions, and freezing weather in the US. WTI hit a fresh 7-year high yesterday, near $91 a barrel, set for a jump of more than 4% this week. So it looks to be a pretty interesting end to the week as well. We've got the payrolls number out. I saw that the expectation is for 110 jobs expected to have been created. I think on Twitter that Goldman's were expecting a minus 250 number, which would be horrendous compared to what that is.
Yeah.
That earlier expectation. I'll check out our calendar as well and see what the expectations are there.
Yeah, okay.
So Steve, let's get stuck into some charts. Where shall we start today?
I don't mind starting with the indices. I'll start with Amazon maybe first. I haven't really looked at this recently, but if we look at the weekly chart, we can see that I don't like these watermarks. They just get in the way. Maybe it's just me. Maybe I just see things that other people don't.
Sensitive eyes.
Yeah. So obviously this week has been pretty poor week. We had this big sell-off the week of the 18th of June, and looking at this consolidation sideways, bit of a head and shoulder type formation, potentially, or definitely a double top formation. The measured move for that double top formation. Let's do it from here to make things quick. Is a move down to 2,500 for Amazon. However, obviously after the close yesterday, well, this is the daily chart. I mean, this just shows you sort of like the overnight move and the expectation yesterday was pretty poor, and it languished around the lows that we've seen since this correction higher over the last week or so. And we can see the pre-market open is coming in at 3,130, which is, pretty solid. but obviously there should be sort of decent resistance also up around these levels. Let's get this ray going across here. So sorry, why has it gone there? Well, even where it's actually pre-opening now and just above 3,184, expect to find some resistance there. So is it just a flash in the pan? We'll get the dead cat bounce potentially. I think it just okay, the earnings figure's good, whatever, and then just like back to normality, where I think we've a lot of these indices and stocks within these indices are overextended and need to have a solid correction, and it's just doesn't seem to happen. FTSE looks pretty good, talking about getting towards sort of like highs of January 2020. So the pandemic didn't happen. It's all a bad dream. So that'd be good for FTSE. Obviously, that's encouraged by banks. Obviously, Bank of England raising rates yesterday, 0.5% now, is it, Joe?
It's 0.5%. There were a few people that were suggesting that it should have been raised by 0.5% yesterday to 0.75.
Yeah. So I mean, still sort of like makes me scratch my head when we talk about interest rates of less than 1%, even less than 5%. I suppose in my lifetime, I've seen interest rates 3 times that, 15% and things like that, even higher, although just for a short period of time. But it just doesn't feel right that you're able to borrow money at such low rates. Just incredible. But that's the norm now, isn't it?
Yeah, I mean, you can't really borrow at that sort of price anyway, can you?
No, of course not. But effectively, even like mortgages at 2%, sort of that's
point me in that direction.
Oh,
where are you getting them from?
Yeah, I can get them. You can get them still. I think you can still. Yeah.
I don't even know what mine is.
Well, fixed. Yeah, exactly. It's such a small amount, Joe. I know you. What's a mortgage? That's what I hear you saying. So let's look at DAX. DAX has had a bit of a torrid last 3 weeks as well. Looked like quite optimistic at the start of this week with this rejection of the 14,810 support, rally back higher, but the rally stalled and we've retraced. And even looking at today, it looks pretty negative. So, this isn't getting carried away with what's happened in the US. You can see over the last couple of hours since 7 o'clock, we've rejected and we've actually made new lows from yesterday. So yeah, it looks pretty negative on the DAX side of things. Will this filter through into the US? Not sure yet. NASDAQ itself, this was my Gunter head trade yesterday.
Very well done on that.
Yeah, I'm quite chuffed with that. I mean, it did sort of like get down to 14,470, which wasn't far away from a 4-to-1 result, or 4R.
3.3 you got.
Yeah, so pull back a little bit, and then we had this like huge rally at 9 o'clock. But you know what? We've got this head and shoulders formation. Got the neckline coming in. This is a retest of the neckline, in my opinion. And it's really sort of like quite key for NASDAQ to really claw its way back above the 14,880, 14,900 area. If it does, then you've got this sort of reverse head and shoulders, because if you sort of take it from here, have we got the potential to go higher? I mean, you'd really like to see a clear break of that 14,880 to sort of like confirm that. But then it's got potential for that move higher to take you all the way up to here. But the overriding one is this one, the negative one, a retest of the neckline, which that's happens a lot of times in head and shoulders formations. It has the initial break, retest the neckline. If it's confirmed and negativity remains, then that's when we get the real move. And obviously still thinking about 14,400 down to 14,100 as potential targets there. So yeah, it looks pretty interesting, especially with non-farm volatility thrown in there.
Yep.
So yeah, so what's happened to oil? It's broken out of the channel that we've been trading in over the last few days to the upside. So this positive trend remains intact, looking really strong. Let's take a look at the weekly chart to see exactly what where we are compared to, well, from the fib perspective, we've broken through the 78.6. If we're taking it from this level, you can obviously take it from higher levels, maybe approaching the 78.6. Would that be a better level to take it to? We had this reaction higher, and this was the impulsive move down. Yeah, I'd say that's where we start this impulsive move down. So this would probably be a little bit more of a reliable figure. And obviously we've got these previous swing lows and this quite pivotal area that we had way back in 2014 that could provide resistance. So around about the $92 area, a couple of dollars higher, we should run into a bit of resistance here. And then we can really sort of like contemplate that this impulsive move higher should stall. Then we get the correction at some point. But $100 oil doesn't look far away. A lot closer for Brent. We're actually saying a lot closer. That sort of the 150, the $1.50 premium that Brent trades at was a lot higher at the start of the year. But we have broken up above this 86.62 swing high from the 1st of October, the week of October 2018. 61.8% fib. Is that a fair one to take it from? I mean, I'm taking it from the highs. Again, we could sort of really say take it from here. 78.6 comes in at $95. So, and again, back here from 2013, you've got that $97 level of resistance. So nothing really slowing that down. That's going to looks like it's going to continue higher. Natural gas has had a pullback. It's leaving us with an indecisive week on the charts. But after yesterday's bullish engulfing, almost a bullish outside candle, it still remains positive in my eyes. Yeah, I mean, if we really go back, we still see we've got a long way to go before we reach the heady heights that we saw back in 2008 and 2005. So really needs to break above $6.68 to open that up. This will be this triple bottom formation or this double bottom formation from here. The measured move target takes us up to $11.50. So that's definitely one to watch, the natural gas. Gold sort of doesn't know whether to act as a safe haven or not. It's hanging around this $1,800 level.
So boring, isn't it?
Yeah, it's
not doing
yeah.
anything.
Just everyone's sort of like really trying to pile into where there's a bit of value, and gold has lost its appeal a little bit. It still feels to me that we are in this corrective formation. We're a little bit entrenched in it, and it needs a huge catalyst, maybe Russia invading Ukraine or something like that, which, you know, I dread to think of that sort of scenario, but that's the potential. The upside would definitely open up there. We've got this short-term trend line telling us that there is a short-term support in place, but obviously this negative channel lower is the overriding factor. But it is, remember, this channel forms what I consider a bullish flag, which has the potential to target a move to, I think it's $2,500 over time, over a long time. I mean, this move here, 2018 to 2020, is a couple of year thing. Could definitely potentially happen, but that would require the dollar to get hit quite hard. Kryptos, I think, just dive into Kryptos quickly, and then I can hand over to Joe. Again, we've got this head and shoulders formation. Obviously, if we negate this area, what's happened here, we've got this head and shoulders type of formation. I won't call it a true formation because the rally's only been from 28,800, and we are looking. We've been knocking on the door of the resistance at 39,500. poked our way up to there this week, but has sold back off. And obviously with the Nasdaq recovered a little bit yesterday, but still has a little bit of a way to go to sort of like, let me just move that down. That channel looks a bit better like that. So it's reacted off the channel, still got resistance up here, and really needs to clear the 39,500 level to open up a little bit more aggression to the upside. So there's potential for that as well. That's about it, Joe.
Lovely, thank you, Steve. Okay, let's have a look at FX then, shall we? Let's start with the dollar index. Yesterday we saw selling on that, quite a lot of selling actually. So that's 5 consecutive down days we've seen on the dollar index. But what we are seeing now is some support form at the lower end of this bullish channel. So expected really that to be the case. Still think it looks pretty bullish overall. Maybe a little bit concerned, I guess, by this selling that we've seen, but while it remains within this channel, I think there is scope for further upside. Obviously, pivotal day for this today, given that we have the non-farm number due out today. So worthwhile keeping a watch on that. I'm not sure I'd want to make a call either way, but my underlying bias does remain bullish on this for now. Yesterday, it was really a case of the dollar leading the way as a result of the ECB taking no action on the rate decision, but I think the press conference stirred things up a little bit, and as a result we saw some pretty significant moves, a lot of which are actually continuing today. Let's take a quick look at euro US dollar first. That looks quite interesting. As you can see, 5 consecutive days of gains. We have rallied into this resistance level, or just shy of this resistance level here at 114.82. If we get above that, maybe we formed some sort of short-term double bottom pattern and could see a continuation higher in the short term. But we've got a couple of stiff resistance levels to get through in the meantime, 114.82 to 115.25. It was elsewhere really that we saw some, I guess, big breakouts. Really, this being one of them. That was this Euro Swiss. Not typically something that is well traded by us, because it just doesn't often have great opportunities. But maybe what we've got here is a bit of a double bottom formation, 2 lows there, break through the neckline actually today above 105.11, so that looks pretty interesting and could easily continue moving higher from here in the short term. Euro sterling also performed very nicely. I was thinking it was going to get to this support level down here at 82.75, which is the lows we saw back in 2019. But it stalled there just in front of it, as you can see, and we've seen an almighty rally take shape yesterday, a huge bullish outside day, making new lows, but then clearing pretty much all of this previous price action going back to the 24th of January, and we're pushing higher again today. So maybe we will see a bit of a correction here in euro against sterling. Euro yen, anything happening there? That's trying to break out above resistance now, or in fact has, above 131.60. Need to see if that can hold on a closing basis, and maybe we'll see a continuation higher towards 134.12. Let's have a look at cable quickly. Not really much going on yesterday. So we did have the Bank of England, but it didn't really move an awful lot. We could just see a bit of a candle of indecision really overall. So between that and the dollar, they kind of just cancelled each other out yesterday really. Looking at Aussie US dollar, that's on the back foot today. So despite there being only a mild bit of buying interest in the dollar index, we are actually seeing the Aussie underperform. We've seen a couple of days of indecision. So for me, it looks like lower prices will be seen. And I am pretty bearish on this and have been for a while. I think there's some large top formations that are in place. So this is one that I am actively looking to sell into rallies if I get the opportunity to do so. That'll do on the currency front. So obviously there is expected to be some pretty volatile moves later on today with the data that's due out, which we'll come on to in a moment. First of all, we will take a look at the gun to the head trades from yesterday. I managed a 0.55R return on Bitcoin, and Steve nailed it on Nasdaq with a 3.32R win. So well done, Steve. That's a monster win, that is. Nicely done.
Yeah, lovely.
So what you got up your sleeve today? You got to back that up now with something else.
I want to stick with NASDAQ. I want to stick with that sort of like the fact that we've had the overnight rally, the sort of pre-market open. But what we saw yesterday, Joe, is like a real, when you get the sell-off really late in the day, it tends to be the sort of like, you know, the longer term traders or the sort of like the meaty traders, rather than the retail, where you see the retail on the mornings in the open on the mornings. So you get that retail move in the mornings. But when you saw the sort of drive lower yesterday, which was pretty significant, I thought, and then so you've got the bigger participants are trading that sort of level. It's bearish for the next day. Obviously, we've got Amazon coming out, which is like, you know, to hash that out, and that's absolutely wiped out all of the sell-off, and we're back up to where we started. And I think you'll get the same sort of trade today, especially if we get a crap non-farm payroll. So I'm going to go for the same sort of thing. I think you might get a bit of a reaction on the open, where you get the retail traders coming in thinking, yeah, Amazon, blah blah blah. But the real sort of like maybe the smart money is happy to sell into that strength. The technicals are telling me they are. So I'm going to go for quite an aggressive one, getting short of NASDAQ, targeting a really aggressive move, because I'm thinking with the non-farm, the volatility, you could get that aggressive move. So I'm going to go for a 7-to-1 risk reward, selling it here. Stop should be a little bit higher, really, Steve, shouldn't it? Yeah, it should, Steve, but are you going to do it? Let me see. The risk reward sort of like drops to 4.67. You know, I like to I want to keep the 7-to-1. Sorry, that makes it 5-to-1 risk reward. I'm targeting a move to 13,985. And if we look back here, we got lots of support down at around of these levels. Bit aggressive. But yes, stop is at, I feel a bit more comfortable with the stop being higher, 14,885. I'm short NASDAQ myself, have been from yesterday. Saw it come off to here, didn't do anything, pulled all the way back, still on side. But yeah, we'll see how it plays out. There's what I think my stop's around that level.
Okay, cool. I'm going to take a look at Aussie versus the US dollar. As I mentioned, I'm actively looking to sell into strength there. This is the hourly chart, so we saw it correct higher within this channel. We've seen a break to the downside, and now we're trying to take out this low here from the 3rd of Feb, or yesterday, at 71.09. So I'm going to sell it now at 71.08. Hasn't really closed below that yet on a closing basis on the hourly, so it's a little bit preemptive. Stop loss at 71.53, just above this high here that we posted earlier this morning, and targeting a move all the way down to these lows, which is at 69.68. So it's non-farm payroll today. Anything could happen. It is a risk looking at anything linked to the US dollar, so please bear that in mind if you are considering a similar setup. I was just looking actually, Steve, at our economic calendar for the US employment report. So this is the Acuity economic calendar. These are all the high impact events that we've got today listed here. So we've got, as you can see, the US employment report due out today. This is a non-farm payroll due at 1:30 UK time. The forecast is for the creation of 150,000 jobs. And the employment rate is expected, or the unemployment rate is expected to be at 3.9. Now, what's always interesting, I think, with these is seeing what's gone before. I know it can be a bit of a lottery, the non-farm payroll, but this is what has happened to the US dollar in the preceding hour, day, week, and month after the non-farm payroll. So as you can see here, it's a bit of a mixed bag in terms of beating forecasts and missing forecasts, but overall it tends to be a dollar positive event looking at this. So I mean, on average, what's that saying? On average, it's higher by 0.18% 1 hour after the event, and 0.11% higher a day after the event. So,
Okay.
not a lot considering, we typically associate non-farm payrolls with being a pretty volatile event.
So
We can
price
also,
after the event, Joe, at the top is down 0.4%. Price after event. What does that? That
so this is
means.
referring to the actual events that I'm clicking on here. So,
Okay, yeah, yeah,
but this is the average here.
yeah. Okay, and that's on US dollar.
Yes. So we
And
can
you've.
look at Nasdaq.
Oh, lovely.
So again, typically a non-farm payrolls is a positive event for the tech market, up by 0.26% on average over these previous events on non-farm payroll, 0.4 on the day after, which again I'm quite surprised at that it's that low, given that we associate non-farm with being highly volatile.
I mean, what's great, I think, with this, the data we're sort of taking in goes back a couple of years, yeah.
Yeah,
I think it's soon to be more than that, soon to be at least 10 years.
yeah,
Is that correct?
yeah,
So
I think so.
it would be good to see, like, historically, going all the way back, exactly what happens when, say, for instance, we get a negative 250,000. What happened that day to the price of whatever asset you're looking at? I think
Yeah,
that's really, that's why we're sort of like, that's why the Acuity partnership is fantastic, because it gives us more data sets to look at, and it really gives us more information to make a more informed decision or choice.
yeah,
We're not just technicals, we can, although talking about the fundamentals, you can chart the fundamentals, which makes it technical a little bit.
yeah.
So yeah.
Well, you're looking at statistics, probabilities. We're bundling in news sentiment with this. So this is the news sentiment for the Nasdaq over the last month. So the white line indicates price, and as we can see, price has been dropping, as we know, but also the news sentiment has been falling in line with that as well. Really, quite a tight correlation between the two, actually.
Yeah.
So that's a pretty good indicator that they are working together, but not really much opportunity to be gained from that, it would seem. Let's have a look at dollar index. We haven't got any new sentiment for that. Let's have a look at euro US dollar. So yeah, negative towards euro mainly,
Yeah.
but that has improved
Yeah, you can see
over
the
the last few
prices. Yeah,
days, along with the
yeah.
price that we saw, off the ECB yesterday. So yeah, that's quite interesting. So as I mentioned, 150,000 is forecast, but interestingly, I saw on my Twitter feed this morning that investment banks have scrambled to revise their forecast lower as well, with Goldman Sachs projecting a loss of 250,000 jobs versus the expectation. Well, they're saying 125,000 improvement, but either way, this could be a tasty one today.
Yeah, yeah. And maybe you're seeing that filter through into sort of like retail traders looking at that, and the indices coming off as we speak. You know what I mean? So, yeah, they'll be picking up on these headlines and thinking, oh, maybe it's not such a good thing, Amazon doing that well, and just a bit of a flash in the pan, bit of a dead cat bounce.
Quite
And
possibly.
I'm just talking my book, aren't I?
Yeah, you are. Yeah, yeah. Keep going. So aside from non-farm payrolls, other things to keep an eye out for. 1:30, we've got the Canadian employment report. Obviously, it'll probably be overshadowed by what happens in the US at the same time, but the unemployment rate is expected to rise to 6% in Canada. At 3 p.m., we have the Canada Ivy PMI figure. The index is expected to rise to 50, which would be seen as bullish because it moves it into that expansion phase. So plenty going on today, but obviously all eyes on non-farm payrolls today. And I can't remember an event, where there's been forecasts from investment banks that have varied so wild from the overall expectation. So if Goldman Sachs are
Yeah.
right, it could be it could be a bloodbath out there.
Exactly, but is it one of the Goldman Sachs plays? Let's talk about this. Put it on all the news media channels. It's going to be negative 250. Funny enough, it comes up plus 500,000, and they've just bought into all the little old mini
You're
me
such a
traders.
cynic, Steve.
So cynical.
Cynical
Of
Steve.
course, that wouldn't happen. That would be like the that spreading of misinformation. So they
Oh,
would
they've
never
never
do
been known to
anything
do
like
that. It's like that.
no.
If you buy all the Goldman Sachs buy ratings, the conviction buy list that they used to have or still
Oh
have,
yes, yeah.
if you buy everything on that, then you will lose money according to historic figures.
Tantamount to slanderous, Joe.
All
I
right,
want nothing to do with that.
you started it.
Oh dear, we're in trouble now.
All right, let's wrap it up there then. So have a
Yeah.
great weekend, everybody. Hope you had a good week. Obviously, be careful today at 1:30, and we'll see you all on Monday.
Cheers. Take care.
Bye bye.
Bye.